Welcome to the Deep Focus Update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. Not long ago, Toronto's condo market was booming. Cranes dotted the skyline, and new towers seemed to rise overnight, transforming neighborhoods at a dizzying pace. Buyers would line up for hours, sometimes even camping out, just for a chance to purchase a unit. Open houses were packed and bidding wars were almost guaranteed. Investors treated condos like gold, confident that prices would only go up and that rental demand would never slow. Many saw condos as a ticket to easy wealth, fueling a speculative frenzy. Bidding wars and sold-out pre-construction units were the norm, fueling a cycle of rising prices and relentless development. Developers raced to launch new projects, and buyers snapped up units before the first shovel even hit the ground. Fast forward to today, and the market has cooled dramatically. Streets that once buzzed with activity now feel quieter, and for sale signs linger longer than ever before. The frenzy is gone. Buyers now have options and time to think, while sellers are forced to negotiate, accept lower offers, or even pull listings off the market. The fear of missing out has flipped to a fear of overpaying. Many buyers are hesitant, worried that prices could fall even further. New project launches have slowed to a trickle, and the conversation has shifted from how high can it go to how low will it drop. Developers are pausing, waiting to see where the market settles. The once unstoppable market is now uncertain, leaving everyone, buyers, sellers, developers, and the city itself, facing a much tougher, more unpredictable landscape. The sizzle has fizzled, and Toronto's condo market is in uncharted territory, with the future more uncertain than ever before. The numbers tell the story. Toronto's benchmark home price has tumbled to a 4-year low, marking a dramatic shift in the city's once red-hot real estate market. Condo prices are projected to drop as much as 20% from their 2023 peak, a decline that's sending ripples through the entire market and shaking the confidence of both investors and homeowners. Sales volumes have slumped dramatically, with pre-construction condo sales now at their lowest point since the 2008 financial crisis. Developers are pausing new projects, and many sales offices sit empty, waiting for buyers who are in no rush to commit. The sales-to-new listings ratio has plunged, and the absorption rate remains weak, giving buyers unprecedented leverage and forcing sellers to rethink their strategies. Properties that once sold in days now linger on the market for weeks or even months, and price reductions have become the new normal as sellers compete for fewer buyers. Buyers are more discerning than ever, negotiating harder, scrutinizing every detail, and no longer pressured by the frenzy of bidding wars that once defined the market. The market has shifted dramatically, from sellers dictating terms to buyers calling the shots and setting the pace of negotiations. The days of unconditional offers and frantic last-minute buying are over. Open houses are quieter, and realtors are adjusting to a slower, more cautious environment. Today's buyers are cautious, well-informed, and firmly in control, taking their time to make decisions and demanding more value for their money. Sellers must adjust their expectations, rethink pricing, and be prepared to negotiate, or risk being left behind in a market that no longer guarantees quick sales. The numbers reflect a market where power has shifted decisively, and caution now rules every transaction, from first-time buyers to seasoned investors. Toronto's condo market is now a buyer's game, and the rules have changed for everyone involved. What caused this dramatic shift? It's a perfect storm of factors. Investors, once the market's engine, have pulled back as rental demand softens and quick profits fade. Affordability remains a huge barrier. High prices and expensive mortgages have sidelined many buyers. Pre-construction condos are out of reach for most, thanks to soaring construction costs and land values. Buyer psychology has changed. FOMO is gone, replaced by patience and careful comparison shopping. Broader economic uncertainty, trade tensions, job worries, has made people hesitant to buy. Even interest rate cuts haven't been enough to reignite demand. The result? A market cooled by investor retreat, affordability challenges, cautious buyers, and economic jitters. The frenzy is over, replaced by a slow, deliberate pace. Toronto's condo market is in reset mode. Toronto's condo market is now defined by a paradox. There are more resale listings than ever before, yet a striking shortage of new builds on the horizon. This unusual situation is creating uncertainty for buyers, sellers, and investors alike, as the city's real estate landscape shifts in unexpected ways. Active listings have surged past 31,000, flooding the market with options and creating a classic buyer's market. Sellers are now forced to compete fiercely, not just on price, but also with creative incentives to attract attention in a crowded field. For investors who hope to cash out at a profit, the choices are tough. Either accept lower offers and sell at a loss, or hold on and hope for a turnaround that may take years to materialize. Meanwhile, developers are hitting the brakes on new projects. In just 1 year, new condo starts have plummeted by 60%, leaving many construction sites idle and plans on hold. High construction costs, rising interest rates, and weak pre-construction sales have made launching new towers too risky for most builders. Many are waiting for clearer signs of demand before moving forward. This slowdown in building could set the stage for a future housing shortage. Even as today's market feels oversupplied, the gap between what's available now and what will be needed later is growing. Toronto's population keeps growing, fueled by immigration and urbanization, but the supply of new homes isn't keeping pace. The city now faces a complex challenge. Too much inventory today, but a looming risk of not enough homes for tomorrow's residents. If this trend continues, today's surplus could quickly flip into tomorrow's crunch, with not enough homes to meet demand. The market's paradox is shaping the future of Toronto real estate, forcing everyone to rethink their strategies and expectations. Balancing supply and demand has never been trickier, and the decisions made today will echo for years to come. The condo slowdown isn't just a real estate story, it's a financial headache for Toronto. The city relies on real estate taxes and development charges to fund services like transit and parks. With sales and new builds down, revenue from land transfer taxes and development fees has plummeted. Toronto is dipping into reserves to cover a massive budget shortfall. Over $1.3 billion may be needed just to keep services running. This is not sustainable. Reserves are for emergencies, not ongoing deficits. If the slowdown drags on, residents could face service cuts, delayed projects, or higher property taxes. The city's quality of life is at risk, all because of a cooling condo market. Real estate and city finances are more connected than ever. So, what will it take for Toronto's condo market to recover? Experts agree, it'll be a slow staged process. First, the oversupply of resale condos must shrink. Inventory needs to drop by about 25% before balance returns. As buyers absorb affordable resale units, prices will stabilize, and confidence will slowly rebuild. A stable economy, strong job market, and predictable interest rates are essential for renewed buyer confidence. Only then will pre-construction sales pick up and developers feel safe launching new projects. Recovery will happen in phases, first resale, then new builds. The market needs time, patience, and the right conditions to heal. Toronto's next boom depends on clearing today's backlog. Toronto's condo market stands at a crossroads. For buyers, it's a rare chance to negotiate and buy at a discount, but timing the bottom is tricky. Sellers must price realistically and be patient. Gone are the days of easy, fast profits. Long-term investors may find opportunity, betting on Toronto's growth and future rental demand. The recovery depends on economic strength, interest rates, and smart city policies that encourage balanced growth. The city must plan for affordability and fiscal stability, not just another boom. This correction is a reset, shifting focus from speculation to sustainable home ownership. Everyone, buyers, sellers, and city leaders, must adapt to a new reality. The path forward is uncertain, but with careful planning, Toronto can emerge stronger. The next chapter for Toronto's condo market is just beginning.